Every year, millions of Americans spend weeks stressed about their taxes, gathering forms, chasing documents, sitting with their accountant, going through every number, and then the moment it's filed, they never look at it again. I'm talking about high earners, people making $500K, $700K, or even $2 million a year. Sophisticated people, and they file the most important document they'll probably see all year, put it in a folder, and move on with their lives. Here's why that mistake is costing you so much. Your tax return tells you your real tax rate, whether your withholding is dangerously off, exactly how much your equity events cost you, and where you quietly lost money that you didn't have to lose. It's basically a map of every financial mistake that you made in the last 12 months. And you have about 3 weeks before that map goes cold, your motivation disappears, and you're locked into making the same exact mistakes again next year. I've worked with hundreds of high earners, and the ones that really build wealth don't do anything smarter than you. They just do 11 specific things in the 3 weeks after they file. And almost nobody talks about what those things are. So let's fix that right now. Now, before we start, here's a major thing that most people don't realize about their tax return. Your return is not just a filing requirement, it's a diagnostic document. It shows your effective tax rate, your capital gains exposure, how your equity compensation was treated, whether your withholding was even close, and whether the moves you made last year were as tax efficient as they could have been. Most high earners file their taxes and never actually read their return. They hand it to their accountant, get a number, pay or receive it, and then file it away. The professionals that I work with who have the cleanest financial lives don't treat April as an ending, but as a financial planning trigger. Because the tax return tells you what happened. Planning is deciding on what happens next. So let's get into it. These first 3 need to happen right now, not next month, but now while the numbers are still fresh. Item 1 is review your effective tax rate. Open your return and find the line that shows your effective federal tax rate, the percentage of your total income that went to taxes. Now compare that to last year. Did it go up? If so, the question is why? Was it higher income, more equity events like RSUs vesting, options exercised, or employee stock purchase plan shares sold? Or maybe it was fewer deductions. Or was it simply there was no proactive strategy in place? This number tells you whether your tax strategy is working or whether you just got lucky with the timing. Item 2 is check this year's withholding now. Your return just told you a lot about your full income picture. Base salary, bonus, equity vests, investment income, spouse income. Now apply that knowledge to this year. Most high earners I work with are either over withholding, which means you've been giving the government an interest-free loan all year, or under withholding, which means that you're on track for another surprise next April. The IRS has a tax withholding estimator that can walk you through updating your W-4 based on what you now know. 5 minutes spent on this now can avoid a lot of frustration 12 months from now. Item 3 is pull Schedule D and review your capital gains. Schedule D is a summary of every capital gain and every capital loss that you realized last year. Look at it carefully. Was the tax impact intentional? Did gains stack on top of an already high ordinary income year, pushing you into a higher bracket? Were losses harvested effectively? Or did you leave tax loss opportunities on the table? This is the item that most high earners never actually look at, and it's one of the most useful pages in the entire document. I built a post-filing checklist so you can work through all 11 items systematically without missing anything. It's the first link in the description. The next 5 items are about using what your return revealed to upgrade the structure of your financial life for the rest of the year. Item 4 is review retirement contribution opportunities. Did you max every retirement vehicle available to you last year? 401k, Roth 401k, IRA, backdoor Roth, mega backdoor Roth, HSA, SEP IRA if you have self-employment income. Contribution limits change every year, and they went up again for 2026. But more importantly, are you using the right mix of pre-tax, Roth, and after-tax contributions given your current income picture and where you expect your tax rate to go over the course of the next decade? Pre-tax contributions reduce your taxable income now, Roth contributions grow tax-free forever, and after-tax contributions give you access to the mega backdoor strategy if your plan allows for it. Most high earners pick one and never revisit it. And the right mix is determined by where your tax rate is going over the course of the next decade, not just where it is today. Item 5 is reassess your investment account structure. Look at what the return showed you about where your income is coming from. Are your taxable and tax advantaged accounts holding the right types of assets? Are you generating unnecessary tax drag through short-term income, interest, and dividends in accounts that could be deferring that exposure? This is called asset location, and it sounds technical, but the math is actually pretty simple. The same investment in the wrong account costs you real money every single year through unnecessary tax drag. And your return just showed you how much. Item 6 is review your charitable giving timing and structure. If you gave to charity last year, was the timing and structure as efficient as it could have been? For high earners, there are often more strategic ways to give. Donor-advised funds, gifting appreciated securities instead of cash, and bunching contributions to get above the standard deduction threshold. If your giving felt scattered or reactive last year, this is the moment to put a simple structure around it for this year. Item 7 is review your equity compensation events. This one is especially important if you have RSUs, stock options, employee stock purchase plans, or any type of equity-based compensation. Look at what triggered tax last year. Was it expected? Was it optimized? Did a vest or an exercise land in a year where your ordinary income was already high, meaning it got taxed at the highest marginal rate? Equity compensation is one of the biggest wealth levers available to executives and senior leaders. It's also one of the most consistently mismanaged from a tax standpoint, because people treat each vest or exercise as a single event instead of modeling it as a multi-year tax plan. Your return tells you what happened. Now it's time to build the playbook for what should happen next. Item 8 is check your estate documents and beneficiary designations. This one feels administrative, but the consequences of getting it wrong are significant. Did a major event happen in your life last year? A marriage, a divorce, a new child, moving to a different state, a job change, a large asset shift, a new account, a rollover. If your life changed, your documents may not have caught up. Beneficiary designations on retirement accounts and life insurance policies override what's in your will completely. An outdated designation is one of the most common and one of the most avoidable estate planning mistakes. Spend 20 minutes this month making sure everything reflects your current intentions. Now, the last 3 are what changes this from a one-time checklist into a system that actually changes next year's return. Item 9, schedule a mid-year tax return right now. Not next month, right now. Open your calendar while you still have the motivation from filing fresh on your mind. Put a mid-year conversation on the books, whether that's with your financial advisor, your CPA, or both. The professionals who consistently avoid large tax surprises are not smarter than everyone else. They just have a regular cadence for reviewing decisions before they become expensive. Mid-year is when you can still act. Q4 is when you're mostly watching. One conversation in June or July with your advisor or your CPA pays for itself every time. Item 10 is build a simple income forecast for this year. You don't need a spreadsheet with 50 tabs. You need a clear picture of what income is likely to hit this calendar year. Base salary, bonus, any equity events you already know are coming. Scheduled vests, a planned exercise, ESPP sale windows, investment income, any business or side income, spouse income changes. When you can see the year coming, you can make decisions ahead of it. You can model whether a Roth conversion makes sense this year. You can decide whether to accelerate or defer a specific equity event. You can set up charitable giving before income stacks. This turns, I hope it works out, into I know what I'm planning around. And finally, item 11 is make one commitment about next year's return. This is the only one on the list that doesn't have a tactical answer. Next year's tax return will tell a story. The question is, will it be a story you designed or one that you're reacting to? The objective isn't perfection. The objective is fewer surprises, better coordination across your income, investments, equity, and tax decisions. More intentional decisions made throughout the year instead of a scramble in Q1. Make that commitment today while it's still top of mind. Look, if you've made it this far, you already know something most people don't. Your return isn't just paperwork. It's a 10-page breakdown of exactly where your financial plan is working and where it isn't. The problem is knowing what to do about it. And that's what a wealth strategy call is for. It's not a sales pitch. It's a focused session where we look at your actual numbers, your income picture, your equity situation, your tax rate, and we identify 2 or 3 moves that would have the biggest impact on your financial life over the next 12 months. Most people who get on these calls walk away with something that they didn't have before, a clear answer to the question they've been sitting on. If that sounds like what you need right now, the link to book is the first thing in the description. And if this video is useful, subscribe. Every week I put out content specifically for high earners and business leaders that want their financial life to actually make sense. I'll see you in the next one.